Today is Tuesday, July 13th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, the grain markets continue to be quite volatile. What did the World Outlook Board and NASS say this week, and how did the market react?
Well, the World Outlook Board really didn't change a lot of the U.S. and world corn and soybean numbers, but the surprise came from NASS when they lowered the spring wheat crop here in the U.S. 41% from last year, and Durham 46%. So domestic millers that use spring wheat really are going to have to scramble to find the supply. At the same time, the World Board did not drop the Canada wheat crop or canola crop as much, so they're going to have to do that down the road. We also noted that U.S. sorghum, barley, and oat stocks-to-use ratio are record low, and so that probably is going to help corn demand. Down the road, I think they're going to have to raise corn demand and lower the carryout, and then next fundamental is the weather. But the market right now, we've got soybeans trading nearby over $13.50. Corn is back to $5.50, and the wheat, Minneapolis wheat is trading over $8.50. And in order to push through some gap areas and through some key resistance now, we're going to need help from Mother Nature.
Yeah, Steve, you mentioned Mother Nature and weather. Everybody's watching the weather. What's the latest Midwest weather outlook?
Well, we're going to have some showers in the next 2 days across parts of Minnesota, Iowa, and then better rains for the eastern Midwest. So it's kind of a break between the have and have-nots. Anybody east of Iowa is looking at potential record yields this year, while west and north in the Dakotas, they may not grow very good crops there. So the market has to try to evaluate that. Our weather guy believes the last week of July and first week of August, we're going to see some very hot temperatures and very dry conditions across the upper Midwest, the northern plains, the Canadian prairies, and the Pacific Northwest. The key to prices will be if the ridge moves back west, middle of August, or stays right in where it is. So I think that the weather is probably going to force the market to add a weather premium.
Steve, let's touch on the soy oil for a moment. These prices are rallying. Why, and do you feel like it will continue?
We've seen several days in a row where the Canadian canola futures contracts has been limit up. And, canola is trading, somewhere around $750, almost $800 a ton, whereas soybean prices are at $550. They probably will grow a crop of canola less than 16 million tons, where the USDA is using 20, and it could even be as low as 13 million tons. So the world has to try to adjust because of that lower crop. The U.S. Yesterday, the World Outlook Board brought soybean oil exports down to next year 16-year lows, and in order to fit the demand in with the production that's forecasted. And for next year, we could see a biofuel record 12 billion pounds, which is 46% of the total production. So if we see that type of demand next year, soybean oil is going to have to go to 70 cents a pound or even higher. Some people are talking about 80 cents a pound, which should push soybean prices up closer to the $14 and maybe the $14.50 area.
Thanks, Steve. Alan, let's talk a little bit about the metals market, specifically the gold. Why did the gold market advance to new highs despite the bearish consumer price index report this morning?
Well, first of all, the CPI did come in stronger than expected. And of course, that would be an indication that the Fed may be thinking about raising rates. And in turn, that would be bearish for the precious metals. In that, they very quickly recovered and rallied to make new highs on the day. So that is an indication that the trend is still to the upside, at least the main trend is higher for the precious metals. So it's a technical signal, and I think it's a valid one that the precious metals are likely to advance I think today from current levels and also longer term.
Alan, you mentioned the Fed. Federal Reserve Chair Jerome Powell is due to appear before Congress on Wednesday and Thursday. What do you expect him to say?
I think he will be generally upbeat on the economy. He'll probably indicate that the economy has improved, and I think, will predict that it will continue to improve. I think he'll talk about the need to keep the accommodation for longer. He may talk about the need to taper earlier, possibly, if the economy does improve more than expected. But I think generally the message will be upbeat on the U.S. economy.
And one final question for you, and it pertains to the stock indexes. Why are the stock indexes recovering from the early morning weakness that was linked to the CPI report?
I think the answer is similar to what I said on the gold market, that the interest rates are still very low by historical standards, and stock index futures in recent weeks and months, and even in recent years, has shown a tendency to recover from bearish news. So I'm anticipating that will be again the case this time. Already we've seen a recovery back to unchanged on the day. So I would expect further gains today and probably some follow-through strength over the next couple of weeks for the indices.
Thank you both very much. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.